Hey everybody, Tom Berry here with Investor Loan Source, and I wanted to shoot out a quick video for you to explain what I'm doing currently in my own portfolio. I get that question all the time. Tom, what are you doing right now? Are you buying? Are you selling? What are you doing? So what I'm doing right now, mostly in my portfolio, is I'm selling off my rental properties on owner finance terms. Now, that doesn't mean I'm getting out of the rental market. It doesn't mean that I don't like rentals. What it means is that in my current area that I invest in, prices have gone through the roof, and so have property taxes. So, in looking at the numbers, we have determined, my wife and I, that it would make more sense for us to take some of these rentals that we have had for a number of years and have depreciated out pretty much as far as we can, and turn them into real estate notes. That offloads all the management, it offloads all of the maintenance, it offloads all of the issues that do come along with a rental portfolio. The beauty is they have appreciated very, very nicely. So it's an opportunity for us to cash out on some of that appreciation and take those chips and move to a different table. So how do we do that? How do we take a rental property and turn it into an owner finance note? So first of all, we use an investor loan source product, imagine that, called the wrapable loan. And any of our loans that we have through banks or private lenders or any other source, we refinance it with an investor loan source wrapable loan. This is a 20-year fixed rate loan that has very favorable terms, and then we can offer these houses a lot of times to the tenants that are currently in there as tenants. We can offer them to purchase the house with a 10% down payment and interest rate that is higher than what we're paying Investor Loan Source on the wrapable loan. So we're not only capturing our equity, we're not only capturing our appreciation, but we're also capturing arbitrage. That is the difference in the interest rate between what we're borrowing at ILS, Investor Loan Source, and what we're lending out to our tenant buyer. So we're making money three ways. We're capturing money on all the forced appreciation because we bought these as distressed properties at one point at a discount. We're capturing the appreciation, which is additional equity, and then we're capturing the arbitrage. Now, in order to make this work, use the ILS wrapable loan, 20-year fixed rate loan, and it's available in every state we lend in. And currently that's 18 states. In addition, at Investor Loan Source, we want to provide more and more products for real estate investors. So as of this month, I'm proud to announce in Texas only, we are able to do a pilot program for RMLO loan origination for your wrap and servicing of that note once you've wrapped it. Now, let me explain that in English, okay? So you've got the loan from Investor Loan Source. You've paid off any other lenders you have. Investor Loan Source is now your first lien provider. You sell the house to, let's just say, your tenant. Doesn't have to be, but they're certainly a great place to start. You sell the house to the tenant owes you more than you owe us. That's good. The tenant pays you, you pay us. So there's two notes involved. The one from you to your tenant is called the wrap. You're wrapping our first lien position loan. In order to make this work and comply with all the federal and state laws, you're going to want to use a residential mortgage loan originator, or RMLO. And Investor Loan Source will be honored to be able to do that for you. We have a lady that runs the RMLO department. Her name is Leanna. And Leanna has been doing the RMLO business for a couple of years outside of Investor Loan Source. She is very knowledgeable and has the software to make sure that RESPA and TILA and Dodd-Frank and all the state regs are being complied with for you. Now, the way I do it in my portfolio is I pass the cost of that RMLO on to my borrower. In other words, your tenant buyer, because that is that is a cost for originating their loan. You should not bear that cost. And Leanna will help you to be able to put that together and push that cost on to your buyer. The other thing that you're going to want to have is a professional servicing company. Again, in order to comply with all the state and federal laws for servicing a loan, particularly what's called a consumer loan, you're going to want to use a third-party servicing company. There are several national companies out there that you could use, and I'll certainly give you a list of those if you wanted to. But in Texas, Investor Loan Source can provide you that service as well. Now, as we build this out in Texas, we want to launch into other states. So if you do live in a state outside of Texas that we currently lend in, and you're using our wrapable loan product, I'd like for you to reach out to us and say, hey, we'd like for you to have these other services, the RMLO service and the servicing service in my state. And if we get enough requests, we'll prioritize that state as we roll out the expansion into multiple states. So that's what I'm doing in my portfolio, and those are some of the products that we are utilizing here in Texas, as well as in the 18 states that we lend in. And if you think that that would work in your portfolio, we'd love to work with you and offer those same services to you as well. As always, reach out to us via the website, www.ils.cash. You can get our contact information there. Or if you have a loan request, if you have a project that needs funded, fill out that application and get it to us. We'd love to look at that project with you to see if we can work together. We will never ask for a fee from you until you have A, been fully approved from us and we agree that we want to do the loan with you, and B, you have accepted the terms that we've laid out for you. We think that's the way lending should be. So feel free to reach out to us. We'd love to look at your project to see if we can work together.